Hi guys, welcome back to another Bitcoin video update, and today we are going to be jumping into that technical analysis on BTC, reviewing what's been going on and where I think things are heading next. Let's roll the intro and get right down into it. Okay guys, welcome back to another Bitcoin video update. We'll try to keep this one quite brief. Some interesting developments with Bitcoin, but not terribly too much going on by the looks of it. So here we have Bitcoin paired up with USDT on the 4-hour Binance chart. And yeah, we're still in our ascending wedge pattern here, kind of playing out as we kind of go into late March and so forth. And we have started to kind of see a little bit of cooling off going on for BTC. So the first thing I think I want to kind of do and take a look at is not necessarily the stochastic. I mean, the stochastic on the 4-hour has almost fully reset, so it's putting us into a pretty interesting position. On the 1 hour, we still have some more to the downside, so I'd still see us calling off a little bit on those timeframes. But I do want to take the stochastics off and throw in the divergence indicator. Here we can see bearish divergence, 3 flags of bearish divergence, some 2 flags of bullish divergence on the 4-hour timeframe. Let's kind of put that into context. So we have seen that since we started to kind of come up into this kind of consolidation range just up here, bearish divergence. We also saw bearish divergence in the last 2 breakouts with some hidden bullish divergence taking us up higher. So we can see here that there's actually a couple of different things going on, but 3 flags of bearish divergence on the way to the upside is giving me cause for concern. Let's bring this back up here for a second. What is going on? Well, it's showing us weakness within the price action, right? So price has gone up into higher highs, but the RSI, which is our yellow line here, the relative strength index, is showing us less momentum. So as price is pushed up higher, momentum has dropped down lower, showing us that there's less interest in buying Bitcoin as Bitcoin's price goes up into higher highs. This is known as bearish divergence. Ultimately, you'd expect momentum to grow as price grows, and therefore you have these runs to the upside like this, right? And you've got bearish or hidden bullish divergence here as the price action goes up into higher lows with lower lows on the RSI, and that shows strength and what is occurring. So for the most part, this is quite an interesting kind of chart. We don't normally tend to find bearish divergence, hidden bullish divergence, bearish divergence, hidden bullish divergence, bearish divergence. Are we now going to be looking for another hidden bullish divergence, which case we could see ourselves pushing up towards our upper trend line, and that could basically be the last kind of hidden bullish divergence before we actually see that last bear flag or bearish divergence really come and take us down even deeper. So it's going to be one of those to keep a close eye on. Now, if we take off our divergence indicator and throw on our volume profiles, you can see here that there has been a pretty significant amount of volume coming in at times when the price has plummeted or pumped. Outside of those, we do not see terribly too much. So for example, here you can see as price is kind of cooling off right now, volume is dropping. This is giving me the idea that we are likely to see another surge up towards our trend line, taking us up above kind of $53,500. Now, as we were pushing up, we did see some volume here pushing up with it, but it hasn't been as significant. It kind of comes and goes. So want to be a little bit aware that the bearish divergence that we're seeing is an indication of weakness, because we're seeing the occasional bit of volume coming here and help push the price to the upside, but it's usually just one candle's worth of volume before we completely drop off. So be mindful over what is going on from that kind of point of view. But I would say that we probably have another move up before we see more cooling off. Okay, so it's good to kind of see this maybe finishing move coming up into our trend line. Once we kind of hit that upper trend line, my expectations will be one of 2 things, right? We're either going to break on through it or we're going to get rejected from it. And it's our job here to kind of ascertain which one is the most probable. In my opinion, the most probable will be rejection from this upper trend line because we've moved way too many percentage points at this point to the upside, currently 25%. So I think the market is kind of requiring a bit of a correction. It doesn't have to be massive. We can just look for 10, 15, maybe 20%. And, we are going to be looking at this trend line that we broke on through to see if we can turn it as support. So moving from the upper to the mid-level trend line, we are only talking about a 5.91%. That could be enough. However, it's more possible that we drop down more towards the 11% correction to the lower trend line. Again, it would take time. It wouldn't be something that would play out instantaneously. For example, we could see something to this effect here, where we lose it and we come down and so forth. And then from here, we break right up into this upper apex area before cooling off, pushing up. And then as I was talking about yesterday, from there, I would expect a bigger move to the downside, unless, of course, we can get those bulls rallying that rally us up and break us out of this bearish pattern, because this is an ascending wedge. An ascending wedge pattern is a bearish pattern, as I was talking about yesterday. But within that pattern in itself, we can have these bullish movements. We've seen a very significant move for Bitcoin, great growth, 25%. With inside the bearish pattern, right? This is understanding the difference between micro timeframes and macro timeframes. At the moment, in the last few videos, I've been really hyper focused on the micro timeframes, this being a 4-hour timeframe. Whereas if we zoom out and we take more of a look at a macro daily or weekly position, those are giving us the more bearish scenarios. So I'm trying to give you the best of both worlds within a micro structure. So here we can see we have this fantastic run to the upside, but it is showing us that we are still contained within our bearish ascending wedge. Now, if of course we can break out above this area, that is going to basically wreck those bears, and that would be fantastic for the Bitcoin bulls. And of course, if we do see a big catalyst for a big move to the downside, this coming out and breaking down from our ascending wedge, that's going to absolutely destroy many retail investors who were FOMOing in and believing that we cannot go down lower than $48,000 or $42,000, for example, right? So we want to be quite mindful over what the data is showing us here. We've had a great run to the upside so far, and we historically, after a great run, do see corrective patterns start to emerge. Now we're reaching the upper trend line. Whether you believe in an ascending wedge or not, one of two things is going to happen. We are either going to break out of this, and if we do, what we want to do is we want to get that close above the trend line, stop loss just below it, and we want a really good long take profit here, and we would be looking at a good 6.35% risk reward ratio if we were to target this one out very well. Okay, so we'll be looking for that breakout. If we can get a close above our trend line here, it might be a good position to go long in a really good way. And of course, if we can see rejection from our trend line here, it wouldn't be a bad idea, in my opinion, to potentially go short with a stop loss really tight just above the trend line and probably target out one of two things. We could target out the mid-level or the low-level trend line here. Personally, probably want to target out the lower one and then just move your stop loss down as price progresses and make sure you lock in those profits. A good risk reward ratio of 6.37 could be achieved here. Maybe a little bit less, around 5 would be a pretty decent return on investment, in my opinion. Now, of course, as I say all the time, if I am to be leverage-based trading, I am going to be trading on BitGet. BitGet is my go-to platform for leverage-based trades. If you haven't yet signed up, what are you waiting for? Check it out. The link is in the description down below. It's a fantastic platform. It's my go-to, easy to use platform. Honestly, guys, if you haven't checked it out, I don't think you'll be disappointed. Why not? Check it out. The link is in the description below. So with this ascending wedge kind of looking to kind of finish off, we can see that potentially looking for some volatility for Bitcoin, but it will go in both directions. As I said, my expectations will be that we'll hit that upper trend line, we'll look for a cooling off, we'll then rally back up to the upper trend line, probably cool off one more time, and then rally up into that apex, probably mid to end of March, and then from there, we'll see that next kind of big catalyst. Now, what is that likely to be? That could be many different things. It doesn't necessarily mean that we're going to see a complete breakdown as indicated right here. It could just be that we have a little reset and then we continue the run to the upside for sure. But there's going to be many different things that could create this scenario where we do see a more significant surge to the downside. Now, initially, in the timelines of events in my head that I was kind of initially thinking was that we were going to see a Federal Reserve pivot, i.e. reduction of interest rates during the end of March. And that's really unlikely to happen now unless something major breaks. Now, there are some problems with regional banks in the US that could be the catalyst that sees those that Fed pivot, but I just don't think the timing is quite right. So we might just see a small breakout here and then a continuation. It'll be interesting to kind of see how things do play out. Nothing is as certain. One of my big concerns, though, is the money that flows into Bitcoin spot ETFs will eventually flow out of Bitcoin spot ETFs. No one really knows how those investors are looking at the market. They've made significant profits so far. Everybody's going to have different strategies. Are they in this for 10 to 15 to 20 years, or are they just looking for a certain amount of percentage points and then out? You know, it's completely new territory, so it's going to be interesting to kind of see how it all plays out. But for now, we are still contained within our ascending wedge. We will be looking for either a breakdown or a breakout, and we'll be looking to trade any of those options. Ultimately, it doesn't matter if you're bullish or you're bearish. The only thing that matters is you're able to capitalize on the trading opportunity that is there in front of you. Why don't you check out this video right here where I'm discussing what is going on with VeChain. It's been an absolute tear recently, so why not check out what I think is in store for VET.